What is a supply and demand zone? A demand zone is basically an area where buying pressure entered aggressively enough to push price higher. It's basically a zone where there's a lot of buying volume, right, that caused price to break out of this consolidation to the upside. Okay, so this is the price point where institutions entered for a large amount of buy orders. A supply zone is an area where selling pressure entered aggressively enough to push price lower. So basically, it's the zone when institutions entered for a large amount of sell order, creating a lot of selling pressure and momentum, causing price to break off this consolidation to the downside. This zone represents areas of imbalance where one side clearly overwhelmed the other. That is why we call them demand zone and supply zone. Now, the reason why these institution zones matter is because these are the areas where price is gravitating toward. You must understand that whenever you go onto the chart and you see strong move, they usually have an origin point. And those origin points are where price is going to move towards next. So when price returns, it will most likely react to the origin point again and then continue moving down even lower. I want you to actually understand the core principles of supply and demand zones because they are the footprints of strong institutional order flow. So I have put like a little tip right here for you, and that is to look for imbalance in price to spot supply and demand zones. Scan the charts and look for big juicy candlesticks, because big juicy candlesticks indicate to us that there's a lot of imbalance in price, and all you have to do after you find the imbalance is to find the origin point of the imbalance, and that becomes your supply and demand zone. So I'm gonna give you two methods to identify your supply and demand zones.